Hello, ladies and gentlemen. Once again, we're here for our three-part series dealing with generational wealth. Tonight, we're going to be talking about it again. We're going to be talking about how to start a bank with the little money that you have. The cavalry is not coming, ladies and gentlemen. The creek has rose, the levee is giving way. It's up to us to save us. We got to start betting on ourselves as we get ready to go into the holidays. A lot of us have made New Year's resolutions last year, and we did not keep it up. And if you look at what's going on in our economy, they're saying, hey, a recession is taking place. They're saying that, hey, don't go out and buy houses. Interest rates are climbing. I don't know what's going to happen with our economy, but I'm telling you this, ladies and gentlemen, we have to take our time and not do a knee-jerk reaction and get ready for the ride of our lifetime. We need to prepare ourselves for what we're getting ready to experience, the greatest opportunities in our lifetime right in our community. It's time that we start betting on ourselves because the cavalry is not coming. We have resources in our own community. So tonight, I'm going to start a three-part series on how you can become a bank, how you can become generational healthy, not wealthy, but healthy to where you can pass on some of the things to your children and your children's children and your children's children. Ladies and gentlemen, we living in the information age. We have YouTube, we have Facebook, we have TikTok, we have everything that you can name on social media. Indeed, everything there. So what we must begin to do is start capitalizing on those things in our community. We have talked about the whole thing from banking to investing to savings to how do you start a business to what the interest rates are, what your credit score mean. We've talked about it all. So now we're going to put it all together. Tonight, we're going to talk about how we can start our own bank. I have two of the best in the business who is doing it. They've done it, they're doing it, and they're going to continue to do it. And tonight, they're going to share some tips with us on we don't have to have $1 million in order to start a bank. We don't have to have a job working at $60,000 to start a bank. We can start right where we're at and become the financial institution that our family can start to profit of. Other communities are doing it. If you're looking around, you'll see other people, other culture that don't look like you. They're starting businesses in our community. They're building homes in our community. They're starting schools in our community. They're building hospitals in our community. They're even starting buying whole strip malls in our community. So what are they doing that we're not? And what do we need to do to start getting those type of things? So tonight, we're going to talk, I believe this, banking is the number one thing. Financial literacy is what's going to get us out of the rat race. I'll say it again. Financial literacy is the only thing that's going to get us out of this rat race. And when you understand financial literacy, then you can make educated decisions. And if you missed the show last week, I'm sorry that we couldn't hear it, but if you heard the show at the beginning, we was talking about being a producer rather than a consumer. If you are always consuming, then you are a slave. You are never going to get out of the rat race. But if you become a producer, and we're going to give you some things on how you can become a producer, then guess what? You're going to be able to make financial decisions for you, your family, and your family's family, and your friends that surround you. So tonight, we're going to get to it. I always believe this. The cavalry is not coming, ladies and gentlemen. We must believe in ourselves. We must start to bet on ourselves. We must start to take advantage of the opportunities that's in our community instead of looking at what's in other people's community and say, we want to duplicate that. I always tell people, I am the Joneses, so I ain't got to chase the Joneses. I am the Joneses. So when you start saying that, that's not arrogant. That's just saying that I bring value to what my environment is. And my environment don't bring value to me. I bring that environment to them. So without any further ado, we have two of the top guys in the business. They're going to bring us out and show us how we can start the banks. Ladies and gentlemen, without any further ado, I have Eric V. Moore and Calvin Phipps with us today. They're going to be talking to us about how we can start a bank. Eric, kind of introduce yourself, kind of let me know what you're doing. You've been on my show twice within a month, so you got to be valued if you're on the show twice. Brothers, when they come on the show, they're not like any other podcast. They come on and take over. And so I don't have a problem with that. He gave us some good stuff, but he said, I want to come back, and I said I was going to have him back. But we're talking about generational wealth, starting a bank. He made me call his friend, ladies and gentlemen, as a disclaimer, he made me call his friend. His name is KP. They call him Calvin. And Calvin, we talked for about 45 minutes. They took up my time, made me talk. They gave me an interview, and they made me interview before they came on my show. So I'm like, hold up, listen. I'm the one who should be doing the interviewing, but they was the ones who was interviewing me. So thank you guys for coming on the show. Thank you guys for being a part and coming on and getting ready to teach us about how we can become a bank starting today in our own community. Eric, take over, man. Tell us a little bit about you.
Good evening, everyone. It's an honor and a pleasure once again to be here with Cepeda on tonight, and good to see you again, my good friend KP. So Eric Moore here in Indianapolis, Indiana, President and CEO of Rising Financial Services and Trinity Property Development. So as you guys know from last time, I own a real estate development company, as well as a credit repair company, business credit and personal credit. And then I'm part of what's called the Lock Group, where we focus on legacy, ownership, and community. And we do that through a number of ways, one being network marketing, one being real estate. And then, of course, you're going to learn one of the main ways tonight is through becoming your own bank, either through infinite banking or personal finance funding. So we're excited tonight for some information we're going to give the community. We're just looking forward to these next 3 weeks, even watching Cepeda really educate, and open the doors to our community in a way I think is going to be just pretty exciting going into 2023.
That's dope.
Okay. What does the Lock Group represent? What's the name of that?
The Lock Group, legacy, ownership, and community.
All right. You bet on yourself when you do that. All right. Say, Calvin, kind of tell me a little bit about what you do.
And the same. Once again, I want to thank you actually for having us on the show, Mr. Jackson. And Eric kind of told a little bit of what we kind of do together. So we've been just moving around, making things happen over the last 6 years. So what I do, I'm actually CEO of what's called Infinite Enterprises under the moniker of Money Movers. What that is just that is the idea, the philosophy of banking, where money has to reside somewhere. We have to move it for it to grow value, and you got to grow a community. That's why Lock made sense. When we got to meet each other, that was the thing we wanted to do, was have this life where it's about legacy, ownership, the things that we're going to put our energy into. We got to have things that we have ownership in it, not just where we just participate in it. And then community is where the education comes in, because it's not just in schools, because, I'm maybe the only one on here that didn't have a college degree, but, it's the networking and the people that we've got to meet that's taught me everything I've known, and just putting that into application in life. So, so through the Lock Group is what we teach through what I teach through Infinite Enterprise, which is Money Movers and the philosophy of setting up that.
Okay. So this is kind of where we're at. So let's talk about it. So what is some of the things, because I know we're going to have a lot of people that want to know about, we've heard about this YouTube where you can start your bank today, we can get rich tomorrow, and we can do all of those things by next week. And we know that those are fairy tales. I used to watch the movie The Wizard of Oz, right?
Yeah.
And one of the things about Dorothy is Dorothy got hit by a storm, right? And when Dorothy got hit by this storm, she was on a journey to get back home. And she had some characters that came into play as she was getting ready to go back home, right? But one of the things that always stuck out to me is that Dorothy had these slippers, okay? And these slippers that she had, only thing she had to do is click them. And those slippers took her back to where she came back from, right? But question is, what are some of the things that we must do in our community that we must click together if we're going to get back home and get back whole in our community? What are some of the things that we got to start doing? I'll start with you, Calvin, since y'all bum rushed me and stole the show, and y'all want to keep going like that. So I'll start with you, Calvin. What are some of the things that we have to do as a community if we're going to get back whole and start banking in our community?
Yeah. Well, you know what? I'm a steal a little bit of your taglines, right? Where you talk about
Right.
Nobody's coming to rescue you, right? That's a real thing. So like when you understand that either you have some form of control or you have to relinquish to control to people who do, right? So like if we can agree on that, we could focus on what we're trying to create. Because we can do many of things. Like one of the things I see us do is that, like let's take I take my brother Eric. When I understood what he was doing in real estate and different things in life, I didn't come learn what he was doing to go do my own thing. My whole question is, how big are you trying to get where you trying to go, and how can I help you? Because I want to know, is his dream big enough for me to fit in it? Because getting there is faster with two of us than one, if that makes sense.
Okay.
Yeah. So I know that, together, I already get that part. So if it's enough of us that knows that it won't be the government that saves us, it's us, right? And then we get enough power, we can get that part, that NC to support us, but we got to create that value first.
Okay. So what you're telling me is that the number one thing that we got to do is start networking with one another. So we got to start communicating like that computer. It's okay to have the computer, but you got to plug it up, and then you got to hit that starter button so that all the systems and the motherboard can start talking, so that we can get a picture of what we should look like, right? So you saying that we got to start network. What are some of the things that you think, Philip? No, I'm gonna ask Eric this question. What are some of the things, Eric, that you think that stops us from networking with one another to be able to get to that bank?
You know what I harp on this one, Cepeda. Within our community, right? Within our community, we lack one thing that other ethnic groups and communities don't lack, and it's just heartfelt, and it's just that trust factor, right? What I love about what KP said was, when he decided, he wanted to go in another direction and expand, right? Expand his arena and expand his portfolio and do all these things. He came looking for someone, right? But he didn't come looking to just take from. He came looking to see how he can add to. So when KP and I got together, it was about, okay, what can we build together? And because of that, there was a trust form that we was able to do some pretty major things together. So as we come together as a community and begin to trust each other, then we can build something substantial together. And that's what the levee is broken. They're not coming. So we got to pull up our own bootstraps, and we got to do it for ourselves. I get it, right? But while we're doing it for ourselves, let's do it with someone else that we know, we like, and we trust that can help us get there faster. For example, tonight we're on this call together. There's someone listening that needs this information, right? And without us coming together to provide this information, where do they go to get it? Free. Right? Because there's a lot of people out there that want to charge you. You get a credit card, $10,000, and I give you all this information. But guess what? Because we're here for the community, you get this information tonight because us three came together, and now you're joining in the community, and you can get this information. But there's got to be a trust factor that I'm trusting the people on this call that they're going to lead me correctly, and they're going to give me the correct information I need to, one, right, expand my financial literacy, and then begin to be able to put into practice the things that we're going to talk about tonight.
Okay, so one of the things that, ladies and gentlemen, as I say, the Calvary's not coming, the creek is rose, the levee is giving way. It's up to us to save us. So one of the things that we have to do, if we're going to start financial institutions in our community, we got Calvin, correct me if I'm wrong. You said, Calvin, the first thing we got to do is that we must understand that we are in this community together. We must start networking. We must communicate with one another. And then Eric kind of broke it down and said, not only do we got to communicate with one another, but we got to start trusting one another so that we can start investing with one another. So those are two things that we can start right today. I can start trusting that Eric is going to do what he say he's going to do, and I'm going to start believing in Philip also. So we can start believing in each other immediately, right? That's something that you don't have to have $1 million to do, right?
That's right.
So the first thing we got to do is when we start these financial institutions and we start these banks, right? We have to have people that want to utilize your services, right? So guess what? The cavalry ain't coming. So when you go to Chase and you go to some of these other banks in our community, they don't have your best interest at hand. You might say, well, Cepeda, you're overstepping it. Well, tell me this: why don't we have any hotels in our community? Why don't we have any financial institutions in our community that represent us, that represent our value system? What are some of the things that you guys have seen when you guys started creating the bank? What are some of the things that you guys have seen that has been positive about the people that you guys have talked to, that you guys have helped create these family banks?
What we've seen, well, one, first off, it's always going to be having a knowledge of the first step of financial literacy, because the word bank is an end goal. There's a beginning of anything. Like a bank is a building, but if you don't actually do banking inside of it, you need to understand it first. So like one of the things we do is that we teach financial literacy. So if people can start to manage their own checkbook, these own things, then they can move, because that's usually what people use a bank for. They allow a bank to do all these, to write their checks to and all this stuff. The thing is now they could do it themselves. So like one is creating a sense of ownership of a person's money. They don't believe they need another entity to do it. So once they have that, they can start to move to the next thing, a confidence of what else can I do with my money, instead of being a consumer, right?
So I want y'all to catch this. He's saying, this guy, Calvin, is saying, listen, not only is it wrong for you just to put your money into a financial institution and not expect a return, but just putting your money in an institution and not knowing what that institution is doing to increase your value to that bank is just as bad. Is that what you're saying, Calvin?
Oh, for sure. Well, you are the value. So one, you got to take it on yourself and understand what you're giving up. That's what I mean. It's financial literacy. Like, you chose to put your money in a place and you need to know why, not do it because everyone else does, right? Therefore, that's how you can do what it is where you're storing your money. You can create it because it's not a physical place. Everything is mental, is what you create. So you got to first understand that part. So, before we can talk about investments, all these things, people have to understand where they are with their own selves financially.
Wow. So you got to understand what your credit score is. You got to understand where you're working at. You got to understand where your 401k is. No longer can we just say, I don't know, I'm just doing it. So, Eric, you kind of talked to me, in the background a couple of days ago. You were saying that you are the bank for your family. Talk to me a little bit about how you have translated that financial institution to where you are the bank. How does that look, and how did you set that up?
So I literally learned this just from conversations, years back with KP, as he talked about, what are you doing with your money? Because it has to reside somewhere, right? And so as you begin to amass a large amount of money, you're taught to do a couple things, right? You taught, well, go put it into the stock market, right? That's what it, right? You got to invest it. You got to invest it. You got to invest it. Go buy some real estate, right? You can't go wrong buying some houses. You can't, you can't go wrong, with Apple. You can't go wrong with getting some Google stock. You can't go wrong with buying some houses. That's all good and fine. You can't go wrong with all of it, right? You can go wrong.
Uh-huh.
Where you can't go wrong at is if I go buy a house, because guess what? My daughter needs a place to live. And if I go buy the house and then she buy the house from me and I become the mortgage, right? It now stays in the family, right?
Whoa.
Because guess what?
Hold up. I want y'all to catch that now. Eric said that y'all definitely going to go buy a house, and instead of renting, you go buy the house. Eric Moore go buy the house. He got a good job. He got good credit. He go buy the house, and then you go buy it, rent it from him. You buy it from him.
Right. Family, right? We're talking about family first, right? Because it starts within you got to start with the family structure. And so if I own this house, why would I allow my daughter to go rent from someone else? Right? And
Wow.
so depending on what her needs is, now I become the bank. I own the house. And just like she would pay Chase that mortgage, she's now paying the family the mortgage.
How you do it?
Wow.
Just
Wow.
today, just today, Cepeda, my daughter came and she said, Dad, my car is just ain't accurate. I need a new car. And she was like, based on this, I can probably afford to pay this. Well, okay, hold on. We're not going to get a new car from a dealership and getting a bank finance. So I told her, I said, we'll start looking for you a car. So how it's going to work is Daddy would buy the car. And you would buy the car from Daddy. And you'll pay the same month. You're probably going to save money, of course, right? But the same payments you would have been paying to the bank, now you're just paying to the family.
Mm-hmm.
Wow.
So guess what? The money stays rotating within the family.
Okay. So
Then you begin to
I'm starting. Yeah. So kind of explain this to me. So somebody now, did you go get the loan, or how did you come up with the money to actually purchase the car to where your daughter's going to make payments to you? Talk to me about how you guys did that, because this is where the nuts and bolts are at. This is not the YouTube channel late at night to where you're gonna just go out and just start saying, I'm gonna go become a bank. That's not what we're doing here. We're going to get to the bottom of this and find out exactly what you need to do step by step to where you can become the bank. Ladies and gentlemen, this is what we must learn tonight. What do we need to do? You said that, hey, do you go out and do you go get a loan, or how do you come up with the cash to get the car?
Okay, great question. I'm gonna say one thing and then I'm gonna slide the mic, because this is where
slide it.
This is where it gets good at, right? And so there's multiple ways to do this, right? But tonight, what I want to focus on, because everyone can't do what I did. I built a nice small empire. I made millions of dollars in the real estate, in the mortgage industry, in the real estate industry, in the insurance industry. I've made a lot of money, and right, instead of taking that money and putting it into a 401k or putting it into the stock market, I decided to reinvest it within the family, right? Reinvest it into my own business, into myself. I banked on myself. Right, I trusted that my experience, my knowledge, and the things I have studied would come to fruition. And so I had enough cash reserves to do that. But watch this. This is what I want people to get. Everyone don't have $200,000 sitting to the side. Yeah. However, if you've been working, please get this. You have to bank on yourself. If you've been working a job for 20 years, for 10 years, for 7 years, and you have a 401k that you've been putting into and they've been matching, right? Think about this. What happened to your 401k this year? Now, you lost a lot of money. I already know. I'm going to answer it for you. However, had you pulled that 401k and then invested it in your family, say you buy a car, and so now the payments are being paid to you. You buy a house with that 401k, and now you're on a land contract to your daughter, to your son, and they're paying you the mortgage. Now your money is still working for you, but now you're building assets, right, and residuals within the family. That's one way. The second way, and this is where it's going to get good, I want KP to come in, because this is where the real structure of infinite banking makes sense for everyone, right? So if you're taking notes, get your pen and paper ready. This is where it makes sense at.
Yeah. You passed me the mic?
I passed you the mic.
So let me give it a little structure. So, because everything got to start with a mindset, right? Because we talked about it earlier a little bit about, I was just in Costco today, and I'm saying it's almost like being addicted to something. Like when, I not to put my daughter on the chopping block, but I mean, she walked in here with a 65-inch TV for $200 because it was $200. But where are you gonna put the TV? It's the thing about consumerism. So when you can defeat that and start to give yourself disciplines, here's what I mean. So in banking, it comes first as a discipline, which means first is what's called self-worth. The question is, how much are you worth? Because when you understand that you trade yourself for money, then if you understood that, how you spend your money would be different. Does this make sense? Right? So once you get that, so then the question is, what is that number? Because see, then it goes to the thing that you was talking about, Cepeda, is this. You said, man, we got to learn to live on 30%, save 70. So once you understand, like, man, I gave up 40 hours of my life in order to get this paycheck, but I bought a TV. So then see what you telling yourself is that Costco is more important, the bill man more important, all these things to where you broke again. So the philosophy is if you do not find a way to save money, right, and you spend it all, then you are a slave. That once you believe that part first, that means that your self-worth is, and that's what they talk about, is what you have on you. So your mindset got to be to save first, spend last. The next one is education. What are you listening to, right? Like it's people who do not want to hear about the, like, you know, the levee's broke. Nobody's coming to save you. These things, they don't want to hear that, right? Because that take away from me going to go party. But instead, yeah, this stuff don't sound that exciting, but this is where freedom is, right? So it's education. What are truths? So here's the truths that I ask people all the time. I ask 3 questions that you got to be honest with yourself, because banking is about the action of it and not how you feel. So banking is this. The first one is, do you pay yourself first? So these, it doesn't matter what you tell me, is it a truth in your life, right? That means that if money comes in, do you set aside money first? If you don't do it, then you know what you should start if you want to be banking. The next one is, do you pay yourself interest, and do you charge interest? This is a thing that changed my relationship with people. When my mentors told me that
JP, I want to chime in on your second point. He said, do you pay yourself interest and do you charge interest? So when I went and bought the house, right, for my daughter, she pays the mortgage that I have set up, right? You don't pay what I pay because she couldn't have got that house from the bank and paid what they paid. So there's an interest built into the house in her payment that she's paying me, right? Because it only makes sense. The money still has to grow. So based on what KPF taught me, I still have to add interest payments, right? It may not be as much as what the bank is charging, but there's still interest built in. So the money still continues to grow and the asset still continues to grow. And
actually, though, it's going to be more. I'm going to tell you why. Because you're not Chase. Just like you said, you've built an empire, though, E. So like those, even though that don't, you can't, when you understand the money comes back in the same place, because people who would not have been able to acquire that thing would have had no shot at it at all. Like there's no house for a daughter if the credit not right at all in the way that the world works. So if I do it, yeah, I'm charging you more. Why? It's because you high risk anyway, but you high risk within the family. The money still sits there. So one, the person got to see the benefit of that. And let's not even start there. That's what I mean in all things, right? Like if you're going to bank, you got to bank all the way. Because here's the question. If someone comes to you, Cepeda, and they say, I want to borrow money from you, and you don't have it, where do they go for money then?
Payday.
They go to a payday loan.
So payday wherever they go. But I'm saying any of these institutions, what are they going to charge them?
Interest.
So here's what I'm telling you. If you do not charge people interest for your money, what you're saying is that your money does not have the same value as the institutions. And so I'm saying that goes into your self-worth because it ain't personal. Wow. It's just how the system works.
Wow. So you're saying that so when we go out and create this bank, mm-hmm. and you don't have to have $1 million, so you just got to have enough capital to get started.
Yeah, let me do this. Banking is in everything you do. So as an example, one of the first things I did to teach my daughter was Eric was able to do with a house. The first thing I taught my daughter was with a cell phone bill that she left. Whatever she did, they wouldn't give her a cell phone. So then most people just get on our plan, right? And that's it. And just, you'll pay. No, listen, you were paying $80 a month and you were okay with it, giving it to the world. So then when dad comes here and I say, listen, I need you to give me $450 up front. Oh, you about to have a conniption fit. Like, what? Why do you want this much money? The question is, Did you do the math on how much you was paying them? How much is 80 times 12? You don't even see the benefit you have. You wanted the phone. I'm making it possible for you to have it, but yet you're fighting me on getting a discount because it's family. Do you see how that's crazy?
Wow.
That's the part that people, our group, believe we want each other money, but we will freely or unconsciously give it to others because we don't understand money. And that's the difference. See, once I had her sit it down and I told her this, listen, this where legacy comes in. Legacy is the next part, is about my children, just like with E. If we go and amass all of this money, whatever, because money doesn't have value. We the keepers of money. We just get to choose how we distribute it amongst each other. But with my daughter, like I told her, let's take the phone, because I'm about to sell her house. I sold her her car. These things too. I said, but okay, the things that we acquire too. When we become old and we have all of this, who gets all this stuff?
There it is.
Wow.
Because so then if you're paying me interest, aren't you really only paying yourself deferred interest into the future?
Wow. So we must become banks then.
Oh, no, well, listen, either you become a slave or a bank, but you won't be in the middle. You just don't know which one you're playing.
Wow. I'm thinking of the Los Angeles Lakers, and I'm thinking that Jeannie Buss inherited the Los Angeles Lakers from what her father did, right? So that means that she didn't have to go out and buy a team. She inherited a team. So when we become banks in our own community, then guess what? We can start inheriting things instead of going out and applying for things.
And inheritance is a plan, actually. It ain't by accident. And I know E gonna talk about that later. And that's what I'm telling you. Like, one of the things that my mentors, that it was crazy when I was around them, was they were excited about talking about dying.
What?
They were excited about talking about dying.
Because
wow.
See, when you understand legacy, one of the things you got to understand is your own mortality. It ain't, see, most people live as though they'll never die. So a person be like, man, Joe, man, you only live once to the day, but let's just say you broke and then you live another 80 years. You just broke for 80 years. The difference is if you plan to be 80 and then what you leave after. The legacy is about what you leave after you. You got to do that on purpose. That don't happen.
Wow. So, ladies and gentlemen, once again, do you got to have, Eric and Phipps, because we ready to start getting some questions. Ladies and gentlemen, if you have questions, please start sending them. I know I won't be able to get to them all. I'm not going to let Calvin and Eric come back on the show. They're not coming back, ladies and gentlemen. No, they can come back. We'll be more than glad to bring them back. But we want to make sure that we get all the questions answered, right? So let's talk about some practical things that we can do. And I'm going to give some tips on what we can do to get started in the banking industry. But let us know. I know we're giving a big mass of what we're doing, but what exactly, step by step, what we need to do in order to start that financial institution?
Well, first you got to deal with third-party debtors, right? That's the first part you got to do. And that becomes creating a budget, because like to have a bank means you need to understand what is in reserve, what you can have that is away from you, right? So one is what you've promised to pay, and then those and what you creating for yourself. So that's where it has to start, is creating an emergency fund. Can you actually live? You have 1 month of savings, 2 months? Like, we got to figure that part out first, right? Because you don't want to live in a impoverished mind that's not banking, right? So you can't ask for it back. So you got to start a budget first and follow it, see it through, and then you'll see the 70% that you're trying to move toward.
Okay, so the first thing we got to do is we're going to talk about it. We're going to start the real, the real deal now. So the first thing we got to do, ladies and gentlemen, we got to start to live off. You must live off 20% of your income. Okay, we must start to live off of 20% of our income. So if you make $1,000, you got to live off of 200. And if you're telling me, hey, Cepeda, I cannot do that, and you know why you can't, is because you're a slave, right? That is a number that rich people live off of. And they didn't do it once they got the money. They did it when they didn't have the money. So the question becomes, when you talk about budgeting, 20% of that income is what you must live off of. Okay. If you want to live off of more income, then guess what? You have to think about what you need to do to create more income. Okay. That forces you to get started right where you're at. Okay. You can be working at McDonald's, make $1,000 a month, but you still got to live off of that $200. That is something that's tangible that you can do. Then the second thing you got to do is, you, like what you was talking about, you must live off of 20% of your income. Then the second thing you got to do is you must invest 30% of your income. And that's what you guys are talking about. So what type of investments do you guys suggest that we should do when we're talking about investment?
I'll start in layers, like because I'll only give you my experience, because how I came to spending time with Eric, because I think the best thing is a person's real story about things. So one part is, yeah, like that. Another thing, the other thing is additional streams of income. That's another way to make more, save more. How you do that? That's how we got into the network marketing piece, and what we do is creating that additional. But then it is things that will act your wage. Let me say that. So let me give you an example. When I got to talk to Eric, and I came and I kind of saw everything, because I wanted to move to assets, to big assets, right? Like I was doing BRRRR, bank loans, these type of things. And it was the hard money loans that when the market changes, if a company is too big in your pocket, they really control your situation and project, not you. Right. Yeah. And so, that is that situation. But once you realize it, now that's where you go form community. Right. So I'm sitting at an event, for a real estate event, and the guy just flat out up front, he said, listen, at the end of the this weekend, it's $50,000 to talk to me. And I'm like, man, I know too many people, because in my the other part of my journey is in network marketing, what we do. That's how I got to meet Eric. But I called him up and I asked him, man, I hear you in real estate. These are key words. People always got, words, banks, real estate, these things. It's the in-depthness you got to get into. And so, like, the one thing I learned is, don't let people tell you about fruit, go and inspect it. So I went and inspected it. And so there's a thing about fruit in the tree. The difference is, yep, it's easy to get some fruit. It's another thing to buy the tree. How much is it? Right? For the tree. And that's the conversation we had, was like, I see everything you're doing. And okay, so a question is, how much is it to actually start to get into this? And it was a big number. I think the number was 100,000, right? So this is one. So let's say you're not there, but there was another conversation we had. He said, man, I got some Airbnbs in Miami. Oh man, okay, cool. So what how can I get started with that thing? So they go to Lang, blah, 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 blah. Oh, this was 7,000. 100,000, 7,000. What could I start first? Let's do some Airbnbs, right? So we get that. We could start there. Find act your wage, right, and grow in that. So that started to go from having that Airbnb, $7,000 in, we making $4,000 a month. You save all of that, right? That puts us closer to the goal. Maybe I'm not at the 100,000 yet, whatever else I got going on, but it's all an accumulation, right? Because I now have a number I want to get to. Rome ain't built in a day. Neither will be your freedom, right? So you
Yeah.
got to base it, and that's what it was. And so yeah, you find where you are, what's your wage, and then ways that your wage can fit into an investment.
So we're talking about investing 30% of your income.
Yeah.
So, let's keep it practical. So if you got $1,000,
Mhm.
20% you're going to live off of.
Yeah.
30% you're going to invest. So that 30%, like what you guys was talking about, you're going to become that bank now.
So yeah,
You're going to
in my
start
opinion,
now we're talking about the banking piece. Well,
yes.
regardless of how much money you make or don't make,
Mhm.
you take 30% of your income and you find other people that you want to invest in. That's what you do. You start to evaluate, like you said earlier. We have to collect interest, okay, on where we're investing our money. So if I'm investing into Eric, right?
Mhm.
And I say, Eric comes to me and says, Cepeda, I got this piece of property that I'm buying, or just say I got this idea, this t-shirt company, and I want to build this t-shirt company. Now you come to me, I'm the bank. I'm the bank now. I'm saying, okay, cool. I'll give you $300 every month until I stop making money with you, and I'm going to charge you $350 a month. You're gonna pay me back 300. You're gonna pay me $50 every month. So I've went from $200 to $250 because now I'm a bank and I'm collecting interest.
Yeah, and here's the thing too, because like you said, we get down in here because I love to give a little bit of specifics, right? So, T. Harv Eker, in his book Millionaire Mindset, he said one of the best ways to know how you wish to invest is to work for the thing you wish to invest in. So, as an example, you get t-shirts. I only got $300, right? Because I'm saving 30%. Well, then I'm gonna go. He got the little t-shirt thing going on. I'm gonna go work for him doing t-shirts and invest at the same time,
Yeah.
right? Because I promise you, like when you don't have enough money, you don't have enough money for it to be big. Your expectations can't be there. You need to understand the workings of money, but you're gonna have to help it too. You know, why? And even if you do, you still need to inspect the fruit. So you're right on time. I can't find the t-shirt guy, but there's a thing we talked about offline is trust, and trust comes with spending time.
Yeah.
Because you my
So
color don't mean that we from the same mother. You're
yeah.
right.
So we got to invest that 30%. So 30% of your income. And one of the things that I like about being a bank, which you guys was telling me, is that you can start right where you're at. You don't
Right.
have to make a $200,000 to start investing 30% of your income. You can be working at McDonald's, Burger King, Finish Line, wherever you at, you can start investing 30% of your income. And I often say this, the greatest investment is not in the real estate, and it's not into the stock market. It's not into none of that. The greatest investment is into human capital. And that's where people make billions and billions and billions of dollars. That's the biggest kept secret. So 30% of your income has to be invested to get a return to increase that 20% number. So then you become a producer and not a consumer. And now you're budgeting. That is what we don't learn in accounting. We don't learn that in accounting. We don't learn that in budgeting. We don't learn that, hey, I got to invest so that I can get to where I want to be. Not I go and spend to get to
Mhm.
where I want to be. We got to invest in order to get to where I want to be. In other words, when I was just getting into business, and I'll share this story with you guys. A lot of people said, Cepeda, and I had this guy. He was the number one hard money lender here in the city. He's a friend of mine. And you would think that he had a big office, and you would think that he would have a nice car and all of these things. But he said something to me that was just stuck with me. He said, Cepeda, if I look like what I got, then I would not be able to do
What I
what I
do.
need to be getting done. So this guy was driving around the whole community and lend money out of his trunk of his car. He had an old beat up Porsche that smoked. I mean, smoked bad. And but he was the number one hard money lender here in the city, and you wouldn't even know it. But he was running his business out of his car, and he had millions of dollars. But he was running his business out of his car, and he didn't even have an office. And he said, Cepeda, until you learn how to live according to your budget, you'll never be able to be who you want to be. And that have stuck with me. So I just say, hey, listen, live off of 20%. Invest 30 if you want to get more. If you want to go buy the Louis Vuittons, you want to go buy the Telsas, you want to go buy the nice houses, the $1 million homes, fine. But make sure that you invested is supported by the 20%. Eric, kind of tell me what you did when your daughters and what effect has it had on your family?
Well, so because you only can do, right? You only can expect what you teach, and you only can expect the fruits from what you put into into process, right? And so what happens is this: because of what I'm doing with them, you begin to create within your family structure a philosophy of, okay, we got to now begin to start setting up things for our kids, which is now my grandkids, right? Because you begin to teach a system, right, that becomes duplicatable, right? Because everything has to be duplicatable, right? So now how do I take them from, because what KP said earlier, right? I have an expiration date, and everything I'm doing, where does it go after I expire? And this is what you have to understand. I have 11 kids, Cepeda, right? I have 11 kids.
Hold up. 11 kids, that's a lot of generational wealth, brother.
Yes. But this is what I want you guys to get. Out of those 11, who do you think is going to get the most inheritance? Just think about this. Out of 11 kids, who do you think is going to get the biggest inheritance from me?
The first.
No, that's the problem. The last, no, that's the problem. You know who's going to get the most? The ones who invested into the family the most.
Yeah. That makes sense.
Wow. Okay. Say that again, because the cavalry sound like it's coming now. The cavalry is coming. The creek is rose, daddy, and gave way. It's up to us to save us. So somebody said the youngest, but you said the one who invested the most is the one who's going to get the lion's share. You know what? Little do I realize, both of my daughters work for my company, as you know, Eric.
Right.
And both of my daughters bring a great amount of value. And they keep me on my P's and Q's. But you're saying that the one who invests is the most, who would get the most. So we're talking about banking and starting up a bank. So the best bank that you can have is the best interest that you can get is from your kids, right?
Exactly. Because
you know, I said this. I said this to myself. I refuse to invest into somebody for over 20 years, spend about $500,000, change diapers, spend my time, go back and forth down the highway. They go to college, get a degree, and then they can't come and work for me. I have a problem with that. Okay? And I told my daughters, if you don't want to come and work for me, that's fine. Right? But guess what? When your cargo breaks down, call the people who you work for. They're a great resource.
Listen to this, Cepeda, KP. Mm-hmm. When you walk on my projects, who's working for me?
Family.
But wait, watch this. Not all of my kids.
Yeah.
But guess what? Guess I'm gonna give you a guess. Guess who's working for me? The ones who's banking in the family.
Yeah, buddy. They get it.
The ones who's banking in the family is working. Yeah. So guess what? When daddy passes and everybody think there's this big lump sum coming to everybody, no. The trust, we're going to talk about it another time. The trust is set up so it goes to those, the most, and the lion's share goes to those who invested in the bank.
Okay, so let's talk about it, because that's the key word right there. Let's talk about the trust. How do we set that up? Because we got some people that want to know, how do we get to the bank? How we've talked all around it. Okay, we've talked all around it. So let's talk about, how do we set up this bank now, please?
Right. So I know KP is going to talk about the infinite banking part. So I'm going to talk about the setup. Right. So if
So,
you
ladies and gentlemen, y'all go tell somebody, screenshot this, go tell somebody the Calvary ain't coming. They're going to tell us how to start a bank. If you've been in the rat race, you need to share it. Tell somebody how you going to become a bank. They're going to tell us now.
So every family, if you're listening to my voice, every family needs to have a trust. Okay. This is how the rich, watch this. This is how the rich stay rich. Right. We don't have a lot of time to go into all the details of the benefits of the trust. What I will tell you is the two things that the trust is going to do for you is going to protect your assets and it's going to allow you to pass your assets on tax free. You don't write anything else down right now. I need a trust because it's going to protect my assets and it's going to allow me to pass on assets done the correct way, tax free through the trust. That's why every time someone gets rich, the first thing they do, they go set up a trust and a foundation. The reason why Trump don't pay no taxes, because he has a trust, and he has a foundation. And like he said, I don't make the rules, I just play by them. And the rules are made for the rich. So there are 3 different trusts that you can get, right? And the one you want to write down and the one you want to have for your family is a revocable living trust.
Right. Say that again.
A revocable living trust. That is the trust.
What is that? What is that?
So a trust is simply an entity, a separate entity that you will make up, and what's revocable, what that literally means that you are able to make changes while you're living to your trust. It's it's just simply a legal document created by you that requires you to be named the trustee. So when I set up this trust, I am now named the trustee. And because I set up as a revocable living trust, while I'm alive, I can make any changes that I need to the trust, meaning I can add assets to the trust. I can remove and add beneficiaries to the trust, right? I can literally change the guidelines to my trust. And watch this. I can sell off or add to assets within the trust. And here's the beautiful thing. Catch this. It avoids probate when I pass. There's no probate that needs to happen to all of my assets when they're inside of a trust. Y'all hear about grandma died and now the house is sitting there in trust and they fighting over who gets it and they fighting over the probate. No, when you set it up within a revocable living trust, there's no probate issues, right? Because you set it all up to where it flows through the family. And you get to decide the percentages in this trust of who gets what. That's why I said those who invest in the bank of the family is going to get the lion's share of what's living within the living trust, right?
Okay.
And the trust is simply a legal document that allows you to take all your assets, right, and roll them into this trust so they can be handled legally a certain way when it comes to taxes, when it comes to removal and adding of assets, and when it comes to there's no longer a will necessary per se, because when they're in the trust, right, you pass the trust on within the family. That's why it's called a family trust. Everything goes in there, and I'll talk about setting it up in a minute. Go ahead. You had a question, Cepeda.
So do we get, because I know we kind of push for time now, so we can set up this trust, right? Do we get to the banking piece of it to where we become the bank, to where we get a life insurance policy in there and then we borrow against it, right? Because that's
Absolutely.
what we talked. So kind of talk to us about that, because that's where we starting to become the bank, because we're living off of 20% of our income, ladies and gentlemen, right? So 20% of our income we're going to live off of, right? We're going to invest 30%, okay? And then so we got 50%. So now we got 20% of that 50% that's left. We can invest that 20% every month into that policy, right? You can get a policy. What type of policies are out there?
Yeah. So let me talk about when you start talking about banking in the form of infinite banking, right? Because of course it's a lot of that. So only in the part where in this specific thing I'm talking about, in the form of infinite banking, because banking is philosophy, is how you move money where it resides. So the first thing is that you need to create a way where your money, it grows without the risk of investment. And that's what it is. And how you do that is through a whole life dividend paying policy. And it's set up a certain way, right? In the way that it's done. Why is it set up this way? It
A
is
whole
because,
life, a whole life dividend policy.
yep, a
Whole
whole life.
life dividend policy. So, ladies and gentlemen, so with that money that you're saving, 30% of that, 20% of that goes to that whole life dividend policy. You're not putting it in a checking account hoping that getting that quarter of a percent. You can go get a whole life dividend policy, put that money in that account. What happens when you do that?
When you set that up, it's two things. How insurance company works, and a dividend paying one, is that a regular whole life policy you can borrow from, right?
Stop right there. So once again, you're borrowing from who?
You're borrowing. When you borrow, you are borrowing from technically yourself, but from the insurance policy itself.
So once again, ladies and gentlemen, you have just established a bank. Now you're borrowing from yourself. Your kid want to go to college, you come to Pawpaw. Pawpaw can give you some money, and you're gonna pay me back interest because I'm gonna go to this policy, which is a dividend insurance policy that I'm going to use. You want to buy a house, you want to buy a car, you want to do anything, we're going to go get this policy that we're going to borrow against. You're going to pay me interest, and I'm going to keep borrowing against the policy. That's the family business, right? That's a TV show also, family business. But go on.
Now, here's the thing and once again, this is why I always kind of warn people against, because I have friends who, once again, you start hearing some information, then you say, oh, that's enough, I'll go do this. Like, I'm going to go get a dividend paying whole life policy. And that is not banking. That's the structure of a bank. You built the bank. But the actual knowledge is the community you have that teach you how to do it. That's the whole thing, right? Because all of these things we talking about, just like what we're talking about with Eric, there's a conversation of why not just own your daughter's house, their cars, all the workers, all of this. That's a community conversation. So it's like anything, a bank can exist, but it's only a building. It is the things you do inside of it. So when you use it, notice, so the benefits of it is this, is that your money, your actually money is not used. It is steady acquiring interest in the money because you borrow from the insurance company. And when you do that, you need to know your financial ABCs. You need to have a community that you've built that when you do borrow that money, because they're going to charge you interest for it, is that your bank will give you the lowest interest than what any typical rate that's out there. So the thing of investment is always, can I have the cheapest money to get the biggest return? That's the part in community that you're looking for. And over time, that'll become bigger than what you put in. And it'll keep growing to the point that if you die, any loans you had out will be satisfied from the policy itself and not from your personal family.
Wow. So once again, ladies and gentlemen, when you listen to that YouTube at the middle of the night, this is what they're not telling you. This is how you fund your personal bank. Remember what we said. So let's go back and revisit this because we're almost done now. 1, you must live off of 20% of your income. 2, you must start to invest into other people. Okay? You got to invest in other people. You got to go invest in other things. You got to become a producer and not a consumer. 3, you must begin to bet on yourself. Okay? You must begin to bet on yourself because when you bet on yourself, now you can go back to school. You're going to go to seminars. You're going to do books. You're going to do network marketing. You're going to do the lock group. Y'all can do the lock group. Y'all going to do the lock group. Okay, you're going to invest into the lock group and all of those other things that you're going to be able to do. Okay? Then you must invest 20% of your income into your portfolio or your estate or your insurance policy every single pay period. every single pay period, because this is how you're going to fund your bank with the interest, and this is how you're going to fund that insurance policy, because they give you a percentage on that insurance policy. Am I correct?
Say it again. You
They
said
give you have to fund your insurance policy.
that's policy. When you start it, there's an amount monthly you're gonna be promising to. So that's the part where you say your 20%. That's where you put it, because you know you can come back and borrow out and use it for investments to make more than what you're borrowing for.
Wow. So once again, ladies and gentlemen, this is how we can become our own bank. Do we got to have $1 million?
No, just have some money coming in.
So you got to have money. Does it matter how much it has coming in?
No, because you can start your wage, start where you are. You can always have another one, right? So start where you are.
Okay, Eric, you kind of talked to me about having multiple LLCs in your trust with your insurance policy. So if I got an insurance policy, once again, ladies and gentlemen, banks are built on insurance, right? All banks are federally backed. So how are you going to federally back your bank? You're going to federally back your bank through your own insurance policy. You're going to be CDJ insured, Cepeda D. Jackson insured. That's what you're going to be. That's the estate that you're talking about, right?
Yep.
And I'm going to lend my kids money that is going to be less. It's going to be more than what the insurance company is going to charge me, or I'm charging the insurance company, because the insurance company is paying me to place my money in that account, right? So This is how you fund it. So now we're funding our bank through an insurance policy, just like when you go to Chase. Chase has when it says FDIC regulated, that's what's regulated. That's why it's an insurance policy. So if you have a bad check, you overdraft your account, guess what? It's still good, because it's an insurance policy. The bank's going to charge you $40 for a $10 pizza that you bought. Okay, that's what's going to happen. So let's finish this up. So when you're saying that, okay, we're going to fund our policy with 20% of our income, how much of that if I give $100, how much of that can I use?
60%.
60%. Mm-hmm. So once again, if I give 100, I can use $60, 60% of that, right?
Yep.
And then I can use that to do what?
Figure it out. So like, that's where you start, where you are. So if I got $60 and I loan that out, right? Or whatever I'm doing, I want to use it to actually get rid of debt. So let's just say I borrow at 5%, but my credit card that I got is $1,000 and I'm paying $15. And I would use that $60 to pay down $1,000. Each piece like that, like a small thing that I could take a higher debt for a lower loan. I always want to eliminate debt first.
Well, I'm gonna be honest with you. I'm thinking y'all done gave me an idea. I'm using that to create some more money so that I can use the income so I can get that 20% up so that I can pay off all debt, invest more money. And you know what? I want to live like the Jacksons. I want to live like the Jacksons. So if I want $1 million home, right? Mm-hmm. If I want $1 million home, so now I know how to go about doing it.
Now listen, Peter. I think this went over some of y'all head. You didn't catch this. Chase Bank, do they just have one branch?
No.
So they got multiple branches, right?
Wow.
Mm-hmm.
Right. So if I was listening, KP literally just told me I can have multiple branches. I can have multiple policies. So as my income grow, I can go get another policy. I can get a larger policy.
Yep.
Guess what? Then I can go get another larger policy.
Yeah.
And I can borrow against that.
Yes.
It's always the same. It's how you do it.
Wow. So this is why the cavalry ain't coming. This is why the creek rose, and this is why the levee gave way, and this is why it's up to us to save us. It's time for us to bet on ourselves. So now y'all just showed us, ladies and gentlemen, if you don't know how to get a bank, I want you to dial this number that's at the bottom of this right here, Eric Moore or
KP.
Kevin KP, y'all can call them. You can get them set up, right, KP?
Yeah. We go through a consultation.
Call KP if you are trying to set up a bank. It does not matter. You do not have to have a $60,000 a year job. You just got to have something that you need to be doing to fund what you're doing. This is how we're going to create our banks. Now we know how we can get insurance products to work for us now. See, most of us just say, hey, man, I just want you to buy this life policy. I didn't know that I could borrow 60% against it once I fund it. See, I didn't know that. See, now that I know, it's not just something I got to let just set. I can borrow against it. I can lend it out. I can collect interest off of it. And guess what I'm going to do? I'm going to keep increasing that 20%. That $200 is going to turn into $2,000 because I'm going to be out here selling. I'm going to be like, listen, y'all want money? Come on over here to me. And I'm going to sit down and have people lined up so I can invest into their dreams, into their ideas. And guess what? This is how we can control the economics in our community, because those dollars will start circulating in our community. That sounds like another community that we are in. I ain't going to say it because I don't want to get in trouble like Kyrie did. I don't want to do that. I don't want to get in trouble like Kanye West. I don't want to get in trouble like Ice Cube. I don't want to get in trouble like Michael Jackson when he bought the Beatles because he was going in debt, and then he bought the Masters, and now he uses insurance policy to do that. That's another discussion that we can talk about. But I don't want to get in trouble. But I work for myself. The cavalry ain't coming, ladies and gentlemen. So I want to make sure that we are very clear on what we're doing here. We need to create a trust. We need to create businesses. We lend to our family members, collect interest. There's no such thing as I'm going to lend you money and you're not going to collect any interest. I'm going to lend you some money. I'm going to collect interest because I'm going to go to my insurance policy and pull out 60% of my income off of this policy. And I'm only going to leave an inheritance to those who invest into the business. I can't go get I can't get a 401k policy and get a dividend from a 401k policy if I don't work for the company.
That's right.
That don't happen in real life, so it ain't gonna happen with me either. So, ladies and gentlemen, if you got some kids that you want to get out of your pocket, guess what? These men are telling us how to do it. Start your own family bank, lend your money, create an insurance policy, go get a trust. Is it expensive to get a trust?
Oh, no. Setting up a trust is very simple. Right, there's some directions with it. And when you're part of our lot group, that's the thing, Cepeda. When you're part of the community, right, there's advantages. Membership has its privileges, right? If you're on this call, you're a member of our community. Membership has its privileges. And so we believe in the legacy, the ownership in the community. And so we teach the people within our community how to do these things, how you got to set up. Right. And one way we fund our insurance policy, Cepeda, is through network marketing. That's why we're so big on showing people how to get an extra income outside of their 9 to 5. So guess what? I can take that 20% and grow it to 40. Right.
Wow.
If I want the $1 million house, I gotta make more money, right?
Gotta do it.
Yeah.
You gotta make more money. Right. And it gotta be something outside of my 9 to 5. So we do network marketing, right, through our lot group. And as you begin to make money, we then show you how to take that money that you make
and what to do
and make it make babies for you.
Yeah. Wow. So once again, ladies and gentlemen, we just learned tonight how to become a bank. If you want to get involved and get out of the rat race, this is how you did it. This is how you do it. This is how we are telling you how you can become a bank. And guess what? If we have 10 to 15 different banks in our own community, guess what happened when banks get in trouble? Guess what they do?
Go to other banks.
They merge.
Mm-hmm.
They merge. So I got to merge with Eric. I got to merge with
KP.
Philip, KP. Guess what? And now we're going to bring those resources together, Because like we said at the very beginning of the show, we're going to have to trust one another. We're going to merge. And guess what? We're going to become a conglomerate and we're going to capitalize on the market. But guess what happened? When my bank goes with his bank and his bank, guess what happened? All of those resources and all of those assets that they have I have access to that now. So now when that $500,000 insurance policy, which I only had a $20,000 insurance policy, but Eric had a $500,000 insurance policy. Well, he had $1 million because he got some real estate that he invested into a couple of years ago. And then KP, he had about $100,000 insurance policy. Now, guess what? We put all of those together, and now we have a $3 million insurance policy, and we can get 60% of that. Did y'all just catch what we just said? All of those insurance policies, we can get 60% of that. And guess what? Now we can go and invest into the community, the lot group. So this is how we can start today, betting on ourselves and creating generational wealth. Thank you, men, for coming and showing us how we can start our own bank tonight. If you are missing this, that's on you now. If you're in debt, if you don't know how to get that going, if you're saying, hey, I'm a single mom or a single dad and I'm raising 5 kids, Eric got 11 and he's telling you how to do it. KP, how many kids you got?
Just 2.
2. I got 2. So there you go. So once again, ladies and gentlemen, it's up to you to save you. It's up to you to bet on yourself. I did not tell you that you had to go out and make $1 million. I didn't say that your credit had to be good, did I? I didn't say none of that. I said you got to start right where you at. I gave you the blueprint. 20% of your income, live off of it. 30% of your income, invest so you can take that 20% up. Then once you do that, bet on yourself 30%, go back to school, get a trade. That's going to bring more value to you, right? And also going to introduce you to some people that you might want to invest in. Also, that's just a sidebar. And then you're going to take that 20%, the last 20%, talking about paying yourself first, you're going to pay that into that insurance policy. And guess what that's going to do? It's going to increase and it's going to be there for you. So if something ever happened to you, you die, they're going to fund the whole policy, right?
Mm-hmm.
You die, they fund the whole policy. So guess what? You win when you die. So now we ain't got to do no GoFundMe when you pass away. We ain't got to do that no more. We ain't got to do that.
That's real talk.
Because what we're going to do is we're going to create a foundation. They're going to call it the foundation at some of the schools that you might go to. We're going to create a foundation, and we're going to call it the Cepeda Jackson Foundation. That sounds good. We're going to call it the Eric Foundation. We're going to call it the Philip Foundation. Well, guess what? Now when your kids go to school, now they can pull from something. So now when you pass and they fund that $500,000 insurance policy, guess what? You were starting working at McDonald's. Now you're a big CEO now. Well, your kids have something that they can hang their hat on. Ladies and gentlemen, the cavalry is not coming. The creek is rose. The levee is giving way. Today, we talked about banking. Next week, we're going to talk about that 20%. What should you invest into? We're going to talk about investing next week because I believe that once you get the money, right? Once you create the budgets, what should you invest in? Next week, we're going to talk about the investments. What tools that we need to be investing into, and so that we can make sure that we get the maximum amount of return on our money. I think Philip said it best. He said, you know what? I got to pick my fruit. I got to evaluate it. I got to make sure it's not faulty or rotten. So the best investment that you can do is the person in the mirror. I always say that. You got to bet on yourself. The cavalry's not coming, ladies and gentlemen. The creek is rose and the levee is giving way. It's up to us to save us. Eric, kind of take us out. I'll give you guys the last round robin. What is the number one thing that we got to do when we become the bank?
Number one thing you got to do when you become the bank is all banks do: inspect your fruit and invest it wisely. I think what KP said is so critical, right? If you're going to borrow, You want to pay down debt. You want to put yourself in a better position, right? To raise that 20% of living off of, like you talked about earlier. So, financial responsibility and financial literacy is key to everything we're talking about. So you got to get around the right people, get the right information from people you know, you like, and you trust. And then the most important thing is you got to do something with the information. You got to implement it, right? You want to hear, you want to learn how to be a bank? You got to just do it. You got to be Nike. Just do it.
Just do it. Hey, KP, take us out, man.
Yep. So last thing we talked about, like you talked about, is create that community that's part of the lock. Like if I'm gonna have somebody I'm investing, I'm spending my time to really know who they are, right? Start to create it, because once the money gonna take some time, when it comes, I already know where I want to put it. Same way like when I got to meet Eric. We talked, it didn't happen that day, but I had the game plan of when it does happen, where am I going to put it? So go out and create it. That's why we created Lock, is to create not just business, but actually the environment of creating friendships and family together. And then trust automatically create business. So go build some trust, and business is already a byproduct of that.
Wow. So once again, ladies and gentlemen, I have the numbers down here at the bottom. Both of you guys are insurance agents, right?
I'm an insurance agent.
Okay. KP is the insurance agent. Eric is the one who can help you with the Lock Group. Also, if you want to set up the trust, they can help you. They also are very knowledgeable of making sure how to fund it. I gave you some tools on how to fund it. Real estate is a tool. Stock is a tool. All those things are great. But when you have a policy, you can go out and fund those different type of entities. That's really what a bank is. It's no more than an insurance company. At the end of the day, that's what it is. It's an insurance company, and instead of you working, instead of Chase working and depositing money, they make you work and deposit money into their account, and they get a percentage off that they can lend out to you, by the way. And when you get a mortgage, or when you get a business loan, or you go get a car loan, that car loan is backed by an insurance policy that you made your deposits to there, right? So once again, ladies and gentlemen, they just gave us the game. They just said that we can do it ourselves today. That's what it is. When you go and make your deposit, I just want y'all to think about that. I'm going to go make a deposit for their insurance policy so that they can lend me my money to myself. That is mind blowing. That is mind blowing. Now I see why they cut Kanye West off, and they told him they didn't want his money no more. I see why now. So, ladies and gentlemen, bet on yourself. The cavalry is not coming. The creek is rose. The levee is giving way. It's up to us to save us. We've become the bank. It ain't gonna get any easier than this. You can do it today. All you got to do is start living off of 20%. You just being disciplined. It won't take long before you're able to live like Mr. Jackson. Okay? It won't take long before you will be able to live like the Joneses. Be the Joneses and don't be identified as a Jones. Thank you, brothers, for coming on and teaching us how we can become the bank. Now y'all know how to do it now. It's up to us to save us. We can invest into our own community now. We can buy back the block. Y'all listen to Rick Ross. Don't act like y'all don't. We're going to buy back the block now. So let's get at it. Call these guys up. Let them know that you heard about my show. I'm going to bring them back. They already told me I'm going to have to bring them back because I want them to know that we're going to buy back our own community. And we're going to create ecosystems in our own economic systems in our own community to where we can be successful ourselves. Call these guys up. They'll get you set up. Then drop them a line and say, hey, I heard about you guys on the show. Share this with somebody else. Tell somebody else about it. Don't be selfish. Okay? This is what we must do. If you don't do nothing else, do three things. One, share it with somebody else. Two, start living off of 20% of your income. And three, go buy an insurance policy, and so you can get 60% of your income and live up and invest 30% of that income into that insurance policy and go out and start investing with other people. This is how we can get out of the rat race, and this is how we can have generational wealth. Everything else You tell them that Cepeda Jackson said you've been hoodwinked, led astray, and run amok. If anybody's telling you any different, the cavalry is not coming. The creek is rose, the levee is giving way. Thank you, men, for coming on the show and taking out an hour. Happy Thanksgiving to everybody. And I don't believe in like the pilgrims. I believe in us thanking God for allowing us to bet on ourselves. That's what I'm thankful for. Betting on ourselves. We have the greatest community ever established. Thank you guys for coming and betting on me. This little guy over here at Keystone in the crossing, trying to do a little bit. But thank you guys for coming on the show. I thank you. You just don't know how much I appreciate you guys supporting Generational Wealth Wednesdays.
Indeed. No, man, appreciate it big time. Thank you.
Hey, give a shout out to Mariah. Mariah then struck again, the president of MA&D Capital. She introduced me to Eric. And so I give a shout out to her. She's at home getting ready to start cooking and everything. The president, which is my oldest daughter, which is part of MA&D Capital, and Ariel, they're at home, which is my office president. So they are betting on themselves. Once again, ladies and gentlemen, bet on your kids. Take a chance on your kids. Take out time. Enjoy your family this weekend. Enjoy your time spent. And guess what? Till next time, keep looking at the person in the mirror and keep betting on yourself. Because the cavalry's not coming. The creek is rose. Levees get away. It's up to you to save you. Deuces.
Peace.
Peace.